Okay, guys. So what I want to talk about here is when Bitcoin has dropped on a 4-hour chart, and then price is drops below the white 100 moving average. I mean, drops below all moving averages, but starts to move back up into the white 100 moving average because it will, in theory, hit the white 100 moving average before it hits the purple and the red. So sharp drops and moves back up, and we've not even had the first touch of the white 100 moving average yet. I want to show the action that Bitcoin has done in the past when this has occurred. Okay, so just keep that in your mind. Um, I suppose we've won here. You could call this one. This was back in September. This was the last time this happened. So we had a drop, and by the time we came back up into this, well, there was still we did go a little bit higher, but we still had this. Okay, we still had a lot of chopping to do before we got out of that properly. Okay, let's keep moving. Okay, then the time before that was the crash, the coronavirus crash. Now what happened was, again, we had that drop, and for the first touch was right here of the white 100 moving average. We still had you could call this. We still had a lot of chop. Okay, let's keep going because it doesn't happen too often. Here we had one here as well. Right, this is the first touch. Bitcoin has not had the first touch on the white 100 moving average yet, but this is something similar. We had the two prongs here, and then we move up into the white 100 moving average. After that first touch, there was still a period of chop, quite a long period of chop, and even a retest of the lows. Okay, so that's again. Now here's another one. We had this drop coming up onto the first touch of the white 100 moving average. After that, there was still a period of chop. You can see this quite a substantial period of chop. Now this just 10th of October to 25th of October. There's still 2 weeks of chop, and there was also a stop hunt of the lows. Okay, so just something to keep in mind. Let's keep going. Then the last time before that, obviously, well, down here uh, in the $3,000 crash down to 3,000. You can see the first touch of the white 100 moving average after the crash. Well, I mean, we all know how much chop we had after that. Okay, so we had a substantial amount of chop after that, and just kind of proven that when this sort of happens, we can experience quite a lot of chop. Um, I suppose in true bear markets, you get that drop, you bounce back up, you test the white 100, you try and get above the red and the purple, you fail, you drop back down. But we had a touch here, so it's a different pattern. These drops are not as steep and not as sharp. We've already had touches. This is different pattern, different structure, different price action. Again, you can see we're failing to get above the red 200. We're dropping and bouncing into the white, bouncing into the white, bouncing into the white, getting above the white, and it's different. It's different action. So I don't really class this as what we're seeing right now. We have a more of a sharp drop in what we're seeing. What is this? This is a $20,000 highs. Okay, but what we could be seeing, is this. Suppose this first one is what we could be experiencing right now, because when you actually look at it, we did have two drops basically, and we never hit the white 100 moving average. So, are we going to see all of these sort of structures afterwards? That's what we don't know yet. Is our bounces going to get weaker and weaker and weaker and weaker like we did in the past? Obviously, we formed that large triangular sort of pattern. So we need to see a telling sign, guys, in this market will be when we get above the red 200 moving average. Okay, that'll be if we start to distribute here and drop back below. It's a warning sign, of course. Now, if we go back to the bull market, you can see that a very interesting difference when the drops are when the market is so strong. Your first bounce back touches the white 100. Sorry, said that wrong. Your first bounce back touches the red 200 moving average first. Okay, that's a telling factor in a very strong market. Well, here it had both at the same time. But you can see here, I suppose it almost hit the red 200 first. Okay, that's an interesting sign of strength. You can see here, the red 200 moving average was hit first before the white 200, before the white 100. Sorry, it's showing a decent sign of strength. Now here is something that we have experienced right now. This is very similar to what we're experiencing. So the first bounce back is into the white 100 moving average, and you do have this gap. Now I'll show you see the gap here between the red and the white. The gap between the red and the white. Okay, we look to be experiencing something like that. Now we're getting that bounce back. Now also look at the period of consolidation we needed to get out of this. That's probably a big bounce actually. 10%, not much actually, very small. So it needed a long period of time to get out of this chop. Now, if I go back, that's probably almost all of the. There's something here as well, but you can see here, even though we touched the white 100 moving average first, we still had this period of chop. Okay, so that's another example. So almost all examples that we have experienced a period of chop afterwards. After you hit the white 100 moving average, there's quite a period of chop. If we are going to turn back to bullish, okay, and move back up. So interesting to note. Now, what I want to talk about is the gap, right? You see the gap here, and you see the gap. Well, you had the gap here at the start. Yeah, see this gap, right? That's important to have that gap. Price usually comes back into the red 200 moving average. You get into the white, and it'll like to shoot up into the red. What did this example do? Slightly different there. Is that the one I was looking at? Oh yeah, here. Yeah. Because we consolidated so much, the red was so close, but you can see we did move into it. Okay, now I want to go to today's action. I moved that alarm. Now, you can see that we have that gap. Look at the gap. We have this gap here and here. So if we consolidate here, there's a good possibility we move up into this. If we kind of consolidate for a longer period of time, we'll eventually get that move back up. That gap likes to get filled eventually. So what we got from this video basically is there can potentially be a period of chop even after we have the first touch of the moving average. If we're going to be bullish again, maybe we could reject off that. You know, if it's going to be bearish, it may be different than that. We may roll over. But if we're going to be bullish again, you can see almost all of those bullish examples still had we'll call it a 2-week period of chop before we actually make a move out of that. And if we're going to be in bear market territory, we move up and then fail above the red 200 and the purple 200 moving average and then roll over. Then your bounces get weaker. Okay, so that is something to look out for. This is our failure place where we should fail. If we're going to be bullish, then we need a lengthy period of consolidation possibly to break back up.